All right, good evening, everyone. So we're going to get started here in just a minute. Thank you guys for joining us. Today, we are going to be talking about down payment assistance programs through our CalHFA product. If you are just logging in, just wanted to let you know that unfortunately, Leanne Walker, who is our guest speaker for today, is not able to be here. Unfortunately, she's out sick, but she did share with us the presentation that we will go ahead and share with you. So we're going to get started. So just a little bit about myself. My name is Luz Yuncor with New World Mortgage. I am a CalHFA preferred loan officer, and I've been working with CalHFA products for over a decade. In the last few years, we have noticed a higher more volume with these programs because of the options that they have available for a first-time buyer. And we'll share with you today how to utilize this program. And at the end, if you guys have any questions, feel free to please put them in the chat. We'll go ahead and answer them. Let me know if you guys can't hear me. I think my volume is fine, but at any point, if the volume drops, please let me know. And we'll go ahead and just kind of recap that back. All right. Well, thank you guys. So this year it's CalHFA's 50th anniversary of financing loans for first-time buyers. In the past, CalHFA has always, been an assistant. The program exists for many years, and it's been a great program for first-time buyers, also for teachers. In the past, it was also a CalPERS program. So now it's all wrapped up to one product. And today we're going to share on how you are going to be able to become a first-time buyer with this, okay? Let's go through the presentation, hopefully. Okay, so we'll talk a little bit about CalHFA's vision. CalHFA's vision is that all Californians living in homes that they can afford. So remember, this program is for anyone that lives in California. Their mission is to invest in diverse communities with financing programs that can help more Californians have a place to call home. And they've done an excellent job with this in the last, 50 years that they're existing. The agency has provided special financing and down payment assistance to help low to moderate income families achieve home ownership since 1975. Programs are administered at no cost to taxpayers. All loans must comply with established federal and state laws as well as CalHFA guidelines. All the CalHFA guidelines are posted on their website, which I will share with you later today in the presentation. So if you have any questions or you like additional information about CalHFA and their programs, everything that we'll talk about was also in their website. So there are 4 different types of mortgages that you can obtain through CalHFA. You can obtain a conventional loan, an FHA loan, a VA loan, or a USDA loan. Okay, conventional loans you can obtain from 3 up to 5% of down payment assistance. FHA's 3.5% would be the down payment, though it's required in the 3.5% that CalHFA will provide for the down payment. VA, it's a 0% down program. So 100% of the funds are financed and 3% can be obtained by CalHFA. USDA is the same. It's a 0% finance as well, and CalHFA can provide the assistance. And we'll talk a little bit about different types of programs that CalHFA has that you can combine them whether you need assistance or you need additional closing costs as well. CalHFA programs, when you go into their website under, how to obtain a home loan, you also look at the rates. It can be a little bit confusing about what kind of programs are out there and also what kind of products you can layer with each program. So My Home is a conventional loan, and My Home you can obtain 3% on a conventional, 3.5% down payment assistance if it's an FHA loan. You can use the money towards your down payment, or you can use the funds for your closing costs. Okay. Remember, keep in mind that all the products that CalHFA offers are loans. Okay. They are not repayable and they are not calculated in your debt to income ratios. The loans are 1% simple interest. Okay. So for example, if you borrow $10,000 the first year, you owe 1% simple interest, which is $100. So will be added on to the loan. You could pay off this loan at any time. There's no prepayment penalty. And recently, CalHFA just launched their CalHFA Refi program. So you can refinance the loan at any time. You need to make 6 month payments minimum. And of course, you want to refinance when the interest rate is lower. But if you want to pay off the loan at any time, you could do it without any prepayment penalty. Okay. In addition to the My Home program, which gives you either a 3% for conventional loan or 3.5% for an FHA program, you could also obtain additional funds, which you can layer it with a 2% or a 3% towards your closing cost. Okay. The additional SIP program that you see online, it is only to be used for closing cost only, not down payment. Okay. The SIP program also, it's 0% interest and it's also deferred. So you don't have to pay back anything in your monthly payment. The big advantage for these programs versus other programs, other down payment assistance programs that we provide as a lender, is that other down payment assistance programs do have a repayment in your mortgage when you obtain the home loan. And what that does, it doesn't allow you to qualify to have a higher purchase power versus CalHFA. Since it's deferred, you could actually get this loan and not calculate that monthly payment in your mortgage. So that's a big plus when it comes to CalHFA. In addition to that, you also can access funding. If you don't want to use the SIP program, we can use My Access program, and that is an additional 2.5% down payment, but that you could use towards your down payment and closing cost. Okay, so you could actually obtain up to 5.5% total towards your down payment and be able to qualify for a little bit more. So some examples is, if you have your 3% down payment and you don't have enough money for your closing cost, then you can use My Home program to help you with your closing cost and then have your own down payment. Okay. In some cases, we're seeing in today's market is that if you do have your down payment, for example, and the seller is paying for your closing cost, then you could use the program to put an additional 3% towards your purchase price. And that will, of course, make you qualify for a little bit higher price, but it's going to keep your monthly mortgage payment low. So those are some of the ways we are layering these programs is by, using your own money, adding on 3%, and in some cases, we're adding on the My Access program as well. So just really quick, we had a quick question here. All the funds for the 3 programs deferred or only the SIP? So all the programs are deferred. Whether you choose the My Home, the ZIP program, or the My Access, they're all going to be a deferred program. Okay. The only thing you want to keep in mind is the difference between the My Home and the ZIP and My Access is that the ZIP program has 0% interest. So you don't pay any simple interest on that loan. Unlike My Home and My Access, there is that 1% simple interest that's accrued per year that you have the mortgage. Okay. So these are the 3 programs that you will see on the rate sheets online. Of course, also you're going to see the Dream for All program that's no longer available, but the ones that have access to the vouchers and have, won and were selected in the past, you will see that rate included in the CalHFA. There's a question. Let me see. Someone raised their hand. You can go ahead and put the question on the Q&A. That would be great, and we'll answer it as we go. All right, so any questions on this, please feel free just to put them in the Q&A, and we will answer them. We'll continue with the presentation for now. Okay, so we're going to go through some of the borrower requirements and how to obtain this home loan. You need to work with an approved lender for CalHFA. There is an approval list on their website as well. We are an approved lender and I'm a preferred loan officer for CalHFA, but there is on their website and information on all the approved lenders, in the state of California. The minimum credit score that's required for an FHA loan, it's 640. So you only need a 640 credit score for an FHA, a VA, and a USDA loan. For conventional loans, you need a 680. Okay. If your income if you have a 660 credit score, we do provide conventional loans if you fit under the lower medium income. So that's, if you're making less than X amount of dollars, like I think it's $86,000 per year, and you have a 660 credit score, you could qualify for a conventional loan. Okay, so just check with me if you're on the borderline as well with your credit. If you have a 635 or if you have a 675, once we run a soft pull, we can provide some tips and advice on how to improve your credit to help you qualify for a down payment assistance program with CalHFA. Another requirement is that you must be a first-time home buyer. What that definition means is that you could not have owned a home in the last 3 years or have held title ownership. Okay, there are exceptions to that rule. The exception to the rule is that if for some reason you do hold title with somebody else, and you're not living in the property in the last 3 years, and we have proof that you make your rental payment and that you are not occupying the home that you co-sign with, and you can show me proof that you have your landlord agreement and 3 years of canceled checks or mortgage state or debits that the other person is making the monthly payment, then you do qualify for a first-time home buyer. Okay. And again, if your scenario is a little bit different, feel free to just let me know. I can help you answer and navigate through that question as well. You are required a home buyer education course. It's an 8-hour course online. You can do the online course on your own pace. You could also attend some of the free seminars that you could, get your 8-hour course for free. If you are interested in a free education course, we have resources that we can help you with. We will send you the link where you can sign up. They also do have the Spanish course available 2 times a year. There's actually one this Saturday. If anyone is interested, let me know. We'll send you over the registration link. These are some are in person and some are online. The e-home course that it's provided on CalHFA's website, that is on your own pace, and it is an 8-hour education course that is required to participate on the CalHFA program. A 1-year home warranty is also required. This can be paid by you, it can be paid by the seller, but it is required to obtain a CalHFA loan. And we want to make sure that once you obtain your property, that, in the first year that you're not incurring additional costs, because as a homeowner, when you acquire your property, there's, small things that break, if there's something happening with the water heater or something happening with the plumbing, something that this warranty could cover, it will help you financially. It's going to help you navigate through, those hardships. If, you don't want something to break down, you don't want something, that it's going to be a problem for you when you obtain your home. So CalHFA wants to make sure that for a first-time buyer, that those are not hardships financially that you will occur. So we're going to require a 1-year home warranty. Okay. If you want more information about what that home warranty, has and covers, we'll be more than happy to send you some samples of what a 1-year home warranty includes. Okay, so CalHFA lends for single family, 1-unit property, and it has to be owner occupied. The single family, it can be a condominium, it can be a townhome, and it could also be a single family with an ADU. Okay, CalHFA does not lend on multifamilies, duplex, triplex, or fourplex. This is only for single family residents. Okay, I am going to answer a couple of questions that came in. It's 3.5% is the max for down payment assistance. No, you could obtain up to 5.5% of down payment assistance that can include closing costs and down payment. If you are using the ZIP program, it's only for closing costs. Okay, so if you want additional funds, then we would choose the My Access program along with My Home. We can layer those 2 programs, which will give you the maximum down payment assistance available through CalHFA. Okay, so do we say we can combine My Home and My ZIP? Yes, you will be able to combine My Home, My ZIP, or My Home and My Access. Okay, and that you would be applying for one loan only. So the application that you submit with us is just for one loan. You just, once we receive the application from you, we will ask if you need just a 3% or you need the additional fundings for the closing cost. And we would qualify you for the maximum amount price based on your income and liabilities. And we would let you know what that program looks like with a layer of 3 loans. So you'll ultimately, at the end of the day, you would have 3 loans. You will have the big loan, which is your first mortgage. You would have the additional 3% for the down payment. That would be your second loan. And your third loan would be if you're using, for example, the ZIP program for your closing cost. Okay. So you only need to submit one application with us and we do all the rest of the work. You don't submit an application to CalHFA, you submit an application to us. Once we give you a pre-approval, and you choose to work with us, then, at the time that your offer gets accepted, we will lock and secure all the first, second, and third mortgage with CalHFA. Okay. Any other questions on this? And again, if there's any questions that pop up, we'll go back and we'll answer any questions that you guys have. Income limits. So we're going to cover some samples of income limits. And again, CalHFA lends all over California. So the county that you are applying for, it's not here on their website. You can see your income limits. And this doesn't mean you need to make $211,000. This just means this is the maximum amount of income that you can make to participate on the program. Okay. So if you're in LA County, the maximum income, it's $211,000. For Riverside, it's $205,000, Orange County, $270,000, San Diego, $258,000, Santa Barbara, $235,000, and Ventura County, $259,000. One of the things that I want to make sure that I address with the income limits is that the income limits, it's going to be based on the property you're going to buy into. Okay, so if you are currently in LA County and your income is $240,000, for example, and you want to move to Orange County, then that is fine because we will be using the Orange County income limit. So it is the city that you're going to move into, not the city you're currently living. And again, you don't have to make $211,000. This is the maximum of income that you could make per county to participate on the program. Okay, let me go ahead and answer some questions. How does it work when the seller asks for proof of funds? So that's a great question when it comes to CalHFA programs. So once you apply with us, we're always recommending our clients that whether CalHFA provides to you all the down payment assistance and all the closing cost, there's going to be an initial deposit that it's needed on the contract in good faith once you submit an offer. And again, your agent, your realtor can advise you as to how much that percentage it's going to be. I just had a client that they opened escrow with $2,000 as initial deposit. The property was in the market for over 45 days. The seller wanted to sell. We were able to talk to them about the CalHFA program, explain to them how it works. Of course, the seller asked a million questions to make sure that they're working with someone that's qualified to be able to obtain the mortgage. The buyers are qualified as well. After explaining to them the way the program works, they feel really comfortable in accepting an offer with the $2,000 initial deposit. Again, that's not going to be the case for every property. Your realtor agent is going to advise you to have anywhere from 2 to 3% of initial deposit on your contract in order for you to submit an offer. But that's something you might need to ask your agent of how much money you would need in good faith for the initial deposit. CalHFA does not have a minimum that it's required for initial deposit contract. If the seller accepts your offer with $1,000, we provide to the seller a copy of your pre-approval letter explaining to them that all the funds for the down payment are coming through our program. Okay, so that's a great question for you to have with your agent. Again, we're always advising our clients to at least have anywhere from 2 to 3% of the initial deposit in good faith so you can submit a contract. But that it's case to case. Okay, so this is just a general recommendation from us. Okay. Will the recording be sent out available to us after? Yes, we will be sharing the recording with everyone. Is there still shared appreciation loans for down payment assistance? The Dream for All program, it's no longer available. We don't know if it's going to be coming back in the future. Fresno, California, yes, we are lending in Fresno, California. CalHFA program is available on all counties anywhere in the state of California. Does the home buyer education program expires? Yes, it expires 1 year. So once you take the course, it will expire a year later. Okay. Is the income based on previous tax returns? The income is based on your current income. Okay, so whatever income you're making, it's what we are going to consider for the qualification. The loans are deferred, so just keep that in mind. You will not have 3 different loan payments. Okay, all loans have deferred. They're not going to be repaid in your mortgage. Okay. It's gross income. So the qualification purpose, it's based on your gross income, not your net. Do spouses need to apply or could just one apply? Whoever meets the qualification requirements can apply. Just note that on a FHA loan, if you are applying for a government FHA financing, we do count the non-borrowing spouse obligation as part of your debt for the qualification. So that only applies for FHA loans. So if you're a 680 credit score and you want to do a conventional loan, we don't need to include your spouse's obligation on the credit. So you choose who wants to apply for the home loan. If both of you guys want to apply or just one, that's okay. CalHFA does not have a requirement if 2 people jointly needs to qualify or not. Okay. Okay, so we're going to go over some of the basic questions with CalHFA. With Leon not being here, she kind of goes through a little bit more in depth about the program, who's qualifying for it, a little bit more about how people are obtaining these mortgages. A lot of this information, it's on their website. Okay. You can go into CalHFA's website to look into different programs. You can read a little bit more on the My Access, the SIP program, and also My Home. They're all labeled in there. It can be a little bit confusing. So if you have any questions on that, you can always circle back with us. Another thing too is that interest rates are posted daily on the CalHFA's website. Okay, so a lot of times my clients ask me, what is today's rate? How do I know, Luz, you're giving me a better rate than another lender? We provide to you the interest rates are posted on CalHFA's website. You can check them daily. They do change only one time. It doesn't change 2 or 3 times a day. So in the morning, you will be able to see CalHFA's website and you'll be able to initiate the rate from there. The rate that we provide to you on estimates, we're providing them based on that day's interest rates. However, you are not locking in your interest rate until you actually open escrow when your offer is accepted. Okay. You cannot lock your loan prior to actually obtaining a home loan and a contract. Okay, so that's one of the big questions that people have. Another question that we always get a lot when it comes to interest rates is, can we buy down the interest? We have to check daily with CalHFA to make sure that the program has a buy down, a permanent buy down available that date, so we can quote you properly and provide you an updated estimate. Okay. So just some of the things that we cover with CalHFA, it's going to be, you can access CalHFA through My Home, which is the down payment. You can access them through the ZIP, which is a deferred, no interest for closing costs, down payment assistance. You could also access My Access, which gives you an additional down payment assistance. So just keep in mind that if we're using the SIP program, that SIP program, it's only utilized for closing costs. You cannot combine it with the down payment. Okay. So some of the ones, for you to know what it's the amount that you're getting approved for, you need to be able to submit a loan application. Once you submit an application, with us, we're going to be able to issue a pre-approval. Just so you know, when we receive an application, we're only running a soft pull, so you don't have to worry about your credit being impacted. We're not going to run a hard inquiry. The documents that we're going to need in order for us to issue a pre-approval letter, it's going to be income verification information. So it's going to be a 2 years tax returns if you're self-employed. If you're a wage earner, we just need 2 W-2s, your 2024, 2023, and your most updated pay stub. We also want to see your bank statements if you have additional funds that you're going to be able to put with the down payment. And we're going to also, run different scenarios for you. We're going to run a traditional program versus a down payment assisted program. Of course, some of my clients also want to see what if I provide 10% and I give another 3%, what does that look like? So the program, one of the myths about the program is that this program only works for people that does not have any funds to purchase a home. That is not correct. We have clients that have their own down payment. In addition to that, they like to use this program so they can add more down payment towards their home loan, which puts them in a better financial situation. They could qualify for more. They could also lower the monthly PMI as well. And in a lot of cases, it really helps them offset their own money to be able to pay off credit cards. So then it helps you qualify for more. So utilizing this DPA program is a great tool for you to be able to achieve home ownership a lot faster. So you don't need to wait and save $50,000 for another 3 years to be able to buy a home. Using the DPA program will help you get there a lot quicker. From historically, when markets change for our first-time buyers, right now interest rates are favorable. This week we've been quoting 6.125% on our conventional loans with CalHFA. So about 30, 45 days ago, they were about 6.5, 6.7. So that 0.5% difference does make a big impact on how much my clients are qualifying for. So rates are looking great. Inventory, it's also a good time. You notice if you've been on the market looking for homes, there's more inventory. The inventory's also been on the market for a little bit longer as well. So that is a win-win for our first-time buyers. So if you've been on the fence about going through the process of buying, this may be the perfect time for you to submit your application. Let us help you navigate through different options. And then, show you some samples with no obligations of what that monthly payment can look like. If you're not ready now and you're waiting, maybe next year it's a better time for you, you can also submit your application. You can at least know what you're qualified for now. Perhaps we need to work on the credit a little bit. We can give you some guidance on how to improve the credit. And we can also show you scenarios and loan options of what it would look like next year when you are ready to buy a home. So there's really not the perfect time when you could submit an application to us. I always tell my clients, even if you're, not ready a year from now, I would highly recommend you submit an application. That way we can help you with the process and help you navigate through this a little bit earlier, okay? So you never know. The perfect property might come up and you're going to be prepared, ready to submit an offer. So the next step, would be after you submit your application, we would set up a call with you. It can be a virtual call. We can, get on the phone. I always recommend our clients a Zoom consultation, and we will share our screen and we'll go over different scenarios with you and help you understand the program one-on-one. So what we recommend is for you to download our app to submit your application. If you are interested in submitting an application and you'd like more information about what the items you need, go ahead and send me an email and we will send you the application to you right away. My sister Rosanna will, let you know that your application has been received, and it takes us, same day or 24 hours to get you an answer. If you have additional questions and you want to set up a time with us, you can also visit our website. My calendar, it's posted there. Feel free to set up a 10-minute call with us. We're here to help you and navigate through the process. If you have any questions, we're here to answer anything that you like. Again, there's no better time for you to become a homeowner than it is now. Interest rates are in your favor and inventory is out there, right? So we know that when the interest rate starts dropping, there's more applications coming in, and prices of homes tend to increase historically. Okay, I'm going to answer some questions that we have here from our viewers. Please feel free to answer and put any questions you have on your Q&A. All right, let me see. All right, let me get to both here. How are loans repaid? Are they deferred out of the proceeds of the sale when you sell your home? Yes. So if you choose not to pay off the loan and you stay with the mortgage, keep in mind that the loan it's going to be there for 30 years. Okay, so the loan is for the life of the loan. So if you obtain a 30-year mortgage, the loan will be there for 30 years. Okay, and it is deferred. You could refinance the loan and you don't have to repay it back. CalHFA will subordinate the mortgage. Okay. You can pay it off at any time too. So that's a big question. A lot of people ask, can I pay off the mortgage at any time? Yes, you could pay off the second loan at any time. Are modular mobile homes available for CalHFA programs? They will finance manufactured homes only. So if the property has a leased land, that is not the program, it's not available for the type of financing. So if you are looking for a mobile home, make sure it doesn't have a leased land. Resources available for people's credit score need more improvement eligible. Yes. So the resources is not by CalHFA. The resources available to help you improve your credit would be through us, the lender. So what we do is that we run a soft pull. We take a look at what your credit score is. And if your credit score needs improvement, we have a system, a rapid rescore system will give us recommendations on how you can improve your credit. Okay. So if you are not there yet, and trust me, we've helped clients with a 540 credit score, 580 credit score, and it does take a little bit of time, but if once you're in our ecosystem, we're going to help you through the process. We're going to help you navigate to make sure that the credit improves. Okay. What if we already have a pre-approval? Can we still apply for a CalHFA loan? Absolutely. So if you're already, currently working with a lender, you want to make sure that your lender is a CalHFA approved lender. That is one of the requirements with CalHFA is that you must work with the CalHFA approved lender. If you like a second opinion with us, feel free to apply. Submit an application with us. We are an approved lender, and I'm also preferred loan officer for CalHFA. We can help you get that pre-approval letter out to you right away. How much time do I have after pre-approval? Our pre-approvals are good for 90 days. After 90 days, we do want to update your credit report to make sure there's no changes before we reissue a new one. You don't have to submit a new application again with us. All we have to do is just update your credit report, make sure that you're still in the same job, that nothing has impacted your original pre-approval. Can seniors qualify for a first-time buyer? Yes, there is no age on who can apply for a home loan. You just need to meet the guidelines for CalHFA. So the income limitations, also first-time buyer, that means you have not owned a home for the last 3 years or been on title with anyone in the last 3 years. Okay. So do you see people promoting credit repair services? Are they legitimate? Um, you know, yes, I mean, there are some great credible credit repair companies out there. I would definitely recommend that you do your homework and do a little research to see what kind of what do you need? What do you mean by credit repair, right? If it's things that you need to, omit from your credit, is it just things that you need to improve on your credit? So I always recommend my clients, apply with us, let us see if we can help you improve your credit without having to pay a credit repair company. If we feel that we can't help you because the credit is really damaged, then, credit repair company might be your route to go. What do you recommend for sole proprietor business owners? Taxes, what's expected? So if you own your own business, if you're self-employed or corporate or corporation or partnership, we would need a copy of your tax returns along with your corporate tax returns to see the total adjusted gross income on your filing. So if it's a question specific towards your tax returns, feel free to send me an email. I will put in my direct line as well. If you guys just want to send me a message, I'll be more than happy to answer you something directly that it pertains to your income. Are condo lease lands eligible? So condominiums, there's no lease land on condos eligible for programs. So the condominiums might also be approved. Just to keep something in mind, condos are, if they're FHA approved, then you can obtain an FHA loan. If they're not FHA approved, then we need to go the conventional route, okay? Does our mortgage company match another lenders with better rates? So we offer, CalHFA's rates are posted online. So we are going to provide to you and give you a quote on CalHFA's interest rates, okay? So it's another lender will not give you a better rate. Another lender will not give you any different quote unless you're buying down the interest rate. But another lender, if they are giving you a CalHFA interest rate, our quote's going to be the same. It's not going to change. Okay. Do you also have realtors that we work with specifically? We don't work with anyone specifically. You can, hire your own realtor. However, if you do need us to recommend, we do have a list of our preferred partners who have experience working with the CalHFA programs. They have, helped many of our clients navigate through the process. They understand, how to explain to the seller the CalHFA program and how it works. And that always really helps, So if you do have your realtor that's working with you and is not familiar with the program, have them reach out to me. And then, I can definitely explain to them how the program works and how they can help you win that offer with the seller. Okay. So another question, it's about, it's concerned about monthly payments, how are mortgage payments be able to be more affordable? So if obviously, that's everyone's concern, it's affordability based on their monthly income. CalHFA, it's a one program that provides to you that 3 to 5% down payment assistance, but there are other city programs, there are other down payment assistance programs that if you meet the requirements, they will provide additional funding large enough where your mortgage is going to be affordable. So if that's something you're interested in, navigating through other programs, a larger down payment assistance programs, you can always send me an email, and let me know what cities you're currently living or what cities you are looking at, and I'll let you know if there's additional fundings in those programs available. I know the city of Anaheim, anyone that lives or works in the city of Anaheim, they will be releasing a new program soon that will provide you up to $50,000 for down payment assistance, and that's going to start in the month of November. Can you purchase homes anywhere in Los Angeles? You can purchase a home anywhere in California. Okay, so if you live in Los Angeles and you want to move up to Fresno, your pre-approval letter works anywhere in California. You don't have to stay in LA County. Mortgage insurance is included in your quote, so we will provide an estimate to you. And that estimate, we are going to quote a total monthly payment that includes your principal and interest. It's going to include your home insurance, which is your hazard insurance, fire insurance. It's also going to include the PMI, and the PMI factor is going to be based on the amount of down payment you provide to us. To avoid PMI, you require a 20% down payment. Okay. Should we apply for the CalHFA on our own? So I don't quite understand that question, but yes, if you do want to, apply for a CalHFA, you can submit an application to us and we'll be able to provide a pre-approval letter for a CalHFA. If only one spouse applies for the loan and applies for CalHFA on the loan, can the home be put on both of our names? So that is a great question. So CalHFA, in order for you to obtain a loan with a joint non-borrowing spouse, both of the spouse must meet the CalHFA requirement. So that means if CalHAPA requires a 680 credit score, and you want to put your spouse in the loan, and your spouse does not want to qualify with the income. Um, we require that the 680 credit score for conventional or the 640 for FHA loan must be met as a requirement. Okay. You could always put the property in a trust. Okay. You could always in the future, if you do refinance, include the non-borrowing spouse into the loan. But at the time that you're going to apply for CalHAFA, everyone must meet the requirements for the CalHAFA program. Okay, so I think those are all the questions. If there's any additional questions that you have, go ahead and just include in the Q&A. I'll be here for a few more minutes to answer any additional questions. But we will share this presentation with everyone that attended our webinar. We also have on our YouTube channel, the same webinar with Leanne Walker as our host, as a speaker, posted on our YouTube channel. If you want to go to a in-person workshop, we will be hosting one in the city of Whittier in the month of October. So we will be posting that pretty soon. And then we will be redoing the webinar in the future before the holidays. If you have any friends or family that would like more information about this program, please feel free to share information with them, and we will be more than happy to provide more info. Let me put my information in here. So I'm going to include my email information here. Also, our website. You can apply directly in our website. If you like to get a hold of me directly, you could, this is my direct line. Feel free to send me a message. And then also on our website, you have there's a calendar there as well that you can schedule a call with us at any time, or a virtual consultation if you have additional questions. Okay. Do I speak Spanish? Yes, we are bilingual. We speak Spanish. So if you need any, we do have these webinars in Spanish twice a year as well. And we also have them pre-recorded on our website. For Anaheim, do you have to live and work in the city or just live? Either one. So you either could be living in Anaheim to participate in the program or work in the city. You don't have to do both. Okay. If we have $50,000 in credit card debts, would that be a detriment? So, debts impact the amount that you qualify for a mortgage, of course, as you know. So it depends on, your qualification. We will make recommendation if you pay a certain amount of debt that you can qualify for a little bit more. All debt must be paid prior to a loan approval. So you want to make sure that your credit cards are taken care of. Sometimes credit cards do impact FICO score. So those are some of the things that we will be able to look at with you at the moment that you apply. Okay. So your household income, it's going to be, we're going to qualify you based on the income limit that it's posted online from the CalHAPA's website on the county that you're going to be applying for. Okay. Another one things that you want to note as well is that the combined income for you and your spouse, if you both are going to qualify for a home loan, you want to make sure that you're staying within the income limit. You want to make sure that everyone meets the credit score criteria as well. Okay. All right. I think those are all the questions we have today. Thank you everyone for attending. We had an awesome audience. Thank you for taking the time and joining us. We apologize for Leanne Walker not making it. Unfortunately, she was, out sick. But if you have any questions pertaining anything that we presented today, feel free to send me an email. You can apply with us. We look at our application same day, 24-hour turnaround. So we'll get something to you very quickly at the time that you submit your application with us. All right. Well, thank you everyone for joining us. I think, yes, we will provide the presentation, the video, and the deck to everyone that attended our event. So we should be sending that out tomorrow. Okay. And so one quick question is just to confirm all credit card needs to be paid off prior to loan approval. Um, Not the pre-approval. So we can issue a pre-approval letter knowing and that you're acknowledging that these steps will be paid through at the time that you get an offer accepted. Okay. So once your offer is accepted and you're actually in contract, we will ask that you at that time start paying off the credit cards in order for you to obtain a final loan approval in order for us to issue loan documents. Okay, so if you obviously we don't want you to go out there and pay all your credit cards off if you're not buying a home yet, or if you don't know if you're going to find the right property in the next 90 days. Okay, we will give you a recommendation of what credit cards need to be paid. And then we're also going to, ask you to pay for them at the time that your offer is accepted and you're moving forward with the property. So we might want to do that after inspections because sometimes you open escrow, inspections don't go the way you want them to go, and you already paid off all these debts and you don't, end up buying the home. So we want to make sure that, we cover all these things at the time of the application. So once you apply with us, we're going to go through the consultations. We're going to talk over about your approval process. We'll talk about how much you're qualified for. We're going to talk about the length of your pre-approval. We are also going to cover the do's and don'ts that you need to do when you're participating on these mortgages, some of the things that to look out for, options on financing as well. And we will cover the program again with you to make sure that you're understanding the way the program works. So we don't want you to, obtain a loan that you don't understand how it works. You don't understand how the mortgage is obtained. We want to make sure that everything is very transparent and that you obtain the best mortgage and financing available for you. Okay. All right. Well, thank you guys for coming. Where do you sign up for the home buyer education program? So CalHFA does have an eHome America consultant there, but you can go with any HUD consultant. If you're looking for the free 8-hour course, go ahead and send me an email and we will send you the link to some of the free workshops available online and also in person. Okay. Student loans are counted part of your obligation, depending if they are deferred, depending also if we're doing FHA or conventional loan, we are going to hit you with a minimum of 1% of 0.5%. If your student loans are deferred or they're in an income-based repayment plan, we will talk to you about what are the items that we need for that. Okay. How about debt consolidation loans? Yes, if you're in a debt consolidation loan currently, that is acceptable with our guidelines as well. So just keep in mind, CalHFA has their guidelines when it comes to what you need as a requirement to qualify for their mortgages. We as lenders have our own guidelines of what you need to qualify for when it comes to credit. And when we mean by credit, it's, credit card debt, student loans, debt consolidation loan, charge-offs. There are still credit criteria that you need to qualify for besides the guidelines for CalHFA. And this is why submitting that application, going through the application process, it's just like a regular loan, except that you need to have a certain criteria to meet the CalHFA income limitations and also credit score criteria and first-time buyer criteria as well with CalHFA. All right. Well, thank you guys for joining us. It's 6:53 now. Thank you everyone for hanging in with us this long. We will be sending out this information to everyone. Hopefully by tomorrow, my assistant can get this over right to you. Okay. Thank you. Have a wonderful evening. And we will talk soon. You have all my info again. If you have any questions, anything you'd like to cover, feel free to reach back to us. Thank you. Bye-bye.